We are not a channel focused solely on providing our opinion on possible good investments, but on making known all the tools that fit into the crypto ecosystem, and that will make it easier for you as an investor to make an adequate DYOR, do your own research. There are currently thousands of assets on the market through centralized and decentralized exchanges. Some are layer 1, others are forks of these. Some work on these where we find all kinds of projects such as the so-called play-to-earn games, smart contracts, decentralized finance applications, data privacy, interoperability between blockchains and many more types. All kinds of projects from the non-crypto world are moving into the crypto space to work with the security of the blockchain so they can bring much more security. To do this, we are going to start by knowing how a project is initially financed in the cryptographic market, what agents are involved, and what can lead to a single market startup. Initial stage of a project. When a company reaches a certain stage of development, it looks to fundraising to secure the money to finance the next stage of development. This happens when companies need more capital to scale quickly compared to what they currently have available. Crypto companies are not immune to this, but they have more options at their disposal. Therefore, if a cryptocurrency startup plans to raise capital, it should consider fundraising. However, if the startup is too early or too late in the development stage, it may not qualify for any of the traditional forms of fundraising, such as initial public offerings and obtaining a bank loan. The cryptocurrency and blockchain space introduces novel approaches to fundraising that have not been possible in the past. So what exactly is crypto fundraising? How can companies benefit from this fintech revolution? How is crypto fundraising different from traditional fundraising approaches? Before we get into all that good stuff, let's cover the traditional approaches to fundraising, venture capital funding, and angel investors. Then we'll look at how IPOs fare against crypto fundraisers and initial coin offerings, ICOs, and cover initial exchange offerings, IEOs, DEX initial offerings, IDOs, and security token offerings, STOs, as well as venture capital and angel investors, raising funds the traditional way. If a company is looking to raise capital at some point, its owners may want to look into venture capital firms. In essence, a venture capital fund involves a group of investors who pool their money and spread their bets on startups. Fund managers review many business plans to find projects that they believe will provide the best returns. In exchange for the financing, what they want is capital, i.e., stock in your company, so they can walk away with a quick profit. As a business owner, it's important to understand that a venture capital fund is short-term. These companies want to make a quick profit and go ahead by selling their capital or getting projects with some stability in the market. The good news? If venture capitalists choose to finance a business, it means that they are confident, at least on paper, that the value of the business will rise rapidly. The bad news is that the company could lose some control over its decision-making power in the market. Some of the most important companies in the crypto market are Animoca Brands, a leader in the Asian market, Pantera Capital, a leader in the Western market, Enzac Research, Three Arrows Capital, Banter Capital, Double Peak, Alameda Research, Sequoia, Skyvision, Qcoin Labs, Huobi Ventures, Flow Investments, Oracle's Investments Group, Fenbushi Capital, Besla Inversors, and much more. Angel investors, on the other hand, are usually very wealthy people who invest in a business in its early stages. Their investment focus tends to be on the entrepreneurs and their vision rather than the strength of the business. Instead of looking for a quick exit, their motivation for financing is to make money, mainly because of the capital they may or may not have. In turn, they often work as project advisors. Some of the angel investors are Mark Cuban, Elon Musk, Emily Choi, Sundeep Nailwal, Vitalik Buterin, and many more. Various approaches to crypto fundraising. In 2017, fundraising exploded in the crypto space. Many analysts and participants remember it as the ICO craze. Thousands of projects were launched with ICO. Most of them, to no one's surprise, met with catastrophic failure. However, a handful of them ended up minting millionaires. To many analysts, the ICO craze had all the hallmarks of the dot-com boom, when excessive speculation sparked a massive bubble in the late 1990s and caused numerous online startups to go bankrupt. Experts were preparing for a similar accident in 2017, but it never came. On the other hand, the ICO craze led to the birth of several other forms of crypto finance. These include STO, IEO, and last but not least IDO. Now we will see the characteristics of each of them. Initial coin offerings, ICO. The cryptocurrency industry equivalent to an initial public offering, IPO, is an initial coin offering, ICO. An ICO is a method of raising funds for a company that wants to create a new app, currency, or service. Let's first look at what an ICO does, and then go over the differences that matter. The most important fundraising tool for blockchain and cryptocurrency startups is the white paper, arguably the most important marketing document, inviting people to invest in your company. While brochures and other marketing materials may involve blatant sales pitches, a white paper is intended to persuade and present technical and factual evidence that a specific service is superior to solving a particular business problem. The white paper offers critical details such as how much funding is required, a roadmap with a quarterly timeline, the tokenomics of the business, distribution of tokens, including the percentage of tokens that will be publicly available versus the percentage the founders intend to keep, and specifics of the fundraising campaign. Initial exchange offering, IEO. An IEO is like an ICO, except that the entire issuance is done through select cryptocurrency exchanges. The project owner receives peace of mind because he knows that his token will be available to any investor with access to the exchange. If an exchange is reputable and well established, exchange endorsements can provide investors with the assurance that their funds are protected. The trade-off is the high cost of the exchange managing the coins directly. This includes paying a listing fee for the token, as well as giving up a percentage of token sales. In essence, the exchange is lending its reputation to the project for financial gain. This situation differs from when a cryptocurrency exchange chooses to list a project's token. Under the exchange's own terms, an exchange may list a token once it deems the project worth listing independently. The exchanges that are giving the best returns in these IEOs are Binance, KuCoin, Ascendex, Gate, and others similar. Security Token Offer, STO. The less popular security token offering is a more cautious approach to crypto fundraising. As the name already implies, this approach already recognizes the token as a security. This means that they comply with safety regulations as required. Regulations may include Know Your Customer, KYC, and Anti-Money Laundering, AML, requirements. KYC and AML policies ensure that financial services recognize and minimize risks in accordance with government regulations. Initial DEX Offering, IDO. A DEX is a decentralized exchange. DEXs work like automated market makers. They rely on smart contracts to execute fund transfers, thereby eliminating the need for a third party. KYC and AML compliance is also not required. However, this may subject them to strict regulations later on when the hammer falls. Instead of a personal ID, all anyone needs to participate is a digital wallet address to receive the coin in question. For IDO, there are usually launchpads linked to decentralized exchanges called launchpads, some of the most famous being DAO Maker, Polkastarter, Lunapad, Seedify, Oxbool, and many more. Final resume. So far we have brought the explanation of who we are, what we want to teach you, and how to understand the initial financing of a cryptographic project, a very useful tool to make your own DYOR. And remember, avoid scammers and believe in our motto, be a maniac.